Trading Market Technicals morning call video for Friday, November 29th. It is the last day of the month, and have to be suspicious of what's going to happen today. That I have to tell you. In the last day of the month, anything can really happen. Lots of talk about the fiscal cliff getting progress. Republicans saying not even close. And that's gyrating the markets. Markets in the last week or so have been in a range, a real tight range, and literally getting pulled in either direction, which tells me that there's going to be a bigger resolution to come. Now, whether it be one more spike to the upside, testing the highs prior to the year end, or one more push lower and then running up to the highs. That's something that that can happen. Really, we don't know which direction. We've been in a range the last few days, and I'll show you on a 5-minute chart what I mean. And this is bad volatility. This is something that a lot of new traders, investors, really can get chopped up and frustrated. And I always say that, you know, we try to take a few trades, and if they don't work out, take a step back, reevaluate, see where the markets will go. And if there's no trade setups to be had for the day, there's no reason not to be in cash. You take a look and you get your day set up for the next day. You do a lot of research and move on. So that's my concept of when we get into this bad volatility ranges, so to speak. Now, today is going to be something different. We've been really holding a bullish bias for the last week. We had that 2-day consolidation, one dip lower, and then that's when Obama came out and spoke a couple days ago, and then we've rallied up again. Now, that doesn't tell me that that we're looking to buy stocks, not at these levels. I would be real cautious holding stocks, and if you are, I look to buy protection until this market can resolve itself, at least with one more big push up to get us overbought, or again, you know, some sort of a correction, a pullback, 1 or 2 day pullback, get some stocks at some discounts, and then look to buy going into year end. As of tomorrow, we start December, so we are coming into some seasonal strength. That I will tell you. Now, so our indicators are pointing to be overbought on the daily charts. We are approaching some heavy resistance in the daily charts of our indexes. S&P, right now the S&P cash, we're looking at a 1424 or 1430 cap of this rally. Now, again, we could get it today. Usually on Fridays we have a bullish bias, meaning that a lot of traders, they take off a little early, and markets just tend to drift higher. That's usually the norm. So just be careful. Use caution if you're looking to start short. I would not be looking to initiate any new short positions today. Now, again, anything can happen with this fiscal cliff issue. The Republicans and Democrats are acting like kindergartens, trying to get something done, and they're pointing fingers, not realizing that they're pushing markets back and forth, and for no reason. And that's actually obviously what's causing markets to and traders to get stopped out of their positions. So again, when you have a lot of this uncertainty and we don't know where direction, take a step back a little bit. There's no reason, obviously, not to trade, but try to trade the best setups and just keep tight stops, reduce your risk a little bit. All right, let's go right into the indicators. And this is something, well, actually, let me run through the numbers. Dow up 36. S&P up 6, gold up 5, had a decent little day on gold. Gold's also coming into some seasonal strength. And I'm going to get into some of the seasonal trades. I do have a lot of people that follow that are usually 3 to 6 months longer term and long-term investors with some IRAs. And I'll show you if you're interested in picking up some long trades to hold going into the end of the year for that seasonal trade. I'll run into some, I'll put out a video over the weekend and talk about some of these sectors. And I'll do them via the ETF, and then you can dial down yourself that ETF and then look to see which would be the best with the best performer. Anyway, all right. So back to the indicators, and as you can see here, on our NYMO now is starting to move. As you can see, we pick it up on volatility here in November. So we've been oversold. As you can see here, this is the S&P line chart, and we have rallied nicely. And sure enough, this is now in overbought territory. Now, not in overbought territory that I'd be looking to get short. I'd like to see it push up in this area here above these breakouts, really anywhere in the 70, 80, 90 area. That's what I'd love to see. And that might happen in the next couple of days, and then markets start to retreat again. So looking for that. This is another great indicator. S&P stocks above the 50-day moving average. And as you can see here, many times as we got into these areas, markets actually catapulted up. And we dipped down, and we're in this dipping process now. And we're starting to come to, as you know, as you can see here, a little bit of resistance. There's still work to do. I mean, we could still push higher, 80%, 90%. So there's still room to go higher, and that's why I'm thinking 1425, 1425, 1430 in the S&P, in the cash. Excuse me. Now, I mentioned the NASI. Remember, I mentioned 2 weeks ago. Great indicator. And if you just follow this, and all you did was do this every time it bought and sold, obviously there is some whipsaws in between, but the general does pick up a good indicator for bottoms and tops. Yes, last week I said it went on a buy signal, and sure enough, second week up. So you could have bought the NASDAQ and just held it until this thing creates another sell signal. But this is a great little indicator. This is a weekly chart. I'll show this to you again on Monday, but I don't see too much happening today unless, again, somebody talks and really starts lighting up the fires here in the markets. All right, now let's talk about the dollar. Dollar's still holding true with this number here, right in this area of 80, 80, 10. Hasn't really fell yet or rallied, and we do have some big confluence area of resistance. As you know, we do have this area here, this horizontal area of resistance around 81, but we also have the 20 and the 200-day moving average sitting right above it. So needs a little bit work, but this is where the markets are going to need to watch. This is what the traders are going to be looking at, and if the dollar does pick up steam without anybody talking the dollar up or down, and it's a true move, and I mean true meaning that it's not being driven by some congressional leader speaking about the markets, then this is the hint of where the markets are going to go next. Take a look at the S&P 5-minute chart, and you could show you how ridiculous this has been. Markets did sell off, as you know, and then our trusty leader Obama started speaking up the markets about the fiscal cliff will be resolved by December, and sure enough, we get a catapult to the upside. We jump higher. The euphoria continued in the overnight session yesterday night, and then, of course, we had one of our congressional leaders on the Republican side started talking down, saying we're nowhere near resolution to the end of the year. Markets dipped all the way down in one full candle and retreated all the way back up. But if you take away these areas here, we're literally in the spiders, a 50-cent range just about, which is ridiculous in the spiders. So we've been range bound other than yesterday, and if you go look at here, same thing. Literally range bound. So we have one dip lower, one dip higher, and then the market staying in these ranges, which is telling me volatility is picking up, right? We do have that bad volatility. However, the good volatility follows, and usually that happens when market turns. Now, this could happen. We can rally. We can dip lower again one more time, and then rally into the end of the year, and then the market start to really put in the top, and then start to roll going into the first quarter. So that's something that we will be paying close attention to in the coming weeks. Right? Let's take a look at the daily chart. And as you can see here, our daily chart, we're right into that 14.15 right now. We close at 14.15.95 in the S&P cash, and we are coming into this heavy band of resistance. Now realize this, 10 points is really nothing in the S&P cash. We could do that first thing in the morning, capitulate here a little bit, push really higher, break above the 50-day moving average, and start to roll. So these are the little ideas or little forecasting that I'm looking for. Not that I'm going to bet on anything ahead of time, but I'd like to see the markets react this way, and then put in a reversal bar, and then get our trigger, and that's when we get short. Okay, as you can see here, we're moving nicely. We're getting into overbought. MACDs are crossing up here again, and again, we're at the upper end of the Bollinger Band here in the orange and the yellow-orange area, and we're right into resistance. And you'll see the theme today in a lot of these sector charts. Real quick on the ATR, starting to move up a little bit here, as you can see. Obviously, volatility starts to pick up, and we're going to usually get a little pop. We'll see what happens up in this area here. But again, nothing really new in the ATR chart. And spiders, same thing. As you can see here, we did come across better than average volume in the last 8-9 sessions, and we are into the 50-day moving average now. So held nicely, 2-day consolidation, dipped lower, broke back up, and then we had a nice outside day. But the outside day was really benign. It was actually very small, really putting in a spinning top here. So that's really an indecision, and we'd like to see if this is going to break higher. So yesterday's high for a gauge, I would use in the spiders for a continued move up, and or yesterday's low, and that will put you back into consolidation again. Okay, so yesterday's low will put us back in consolidation. And remember, when you're trading, it's very important to be looking at the S&P 500, whether you're looking at the spiders, the minis, or even the cash for that matter, because virtually most of all stock indices in decent stocks we're talking about, not the garbage Russell 2000, but most of them, and even them, do follow the S&P. So that's my edge, what I look at, and I say, okay, if the market is higher and or trending higher, a lot of these stocks are going to trend higher. And that's what really puts really that little edge in when you're trading intraday. All right, so the S&P, the SPDR's 30-minute chart, have a nice big move up, right? We had that back test of the neckline, looking great. 145.25 seems to be the target here, and we are just hanging right up above in this area. So again, we could bull flag and just chop around here until we reach our target area. But we're going to come across some good resistance at the R2 area, 143.25, that horizontal area of resistance. Next chart, diamonds, ETF, the Dow Jones ETF. Not quite a move, not quite of a move, but we did break above the 200-day. A little constructive here, but our indicators are starting to point getting a little tired from this move. Again, back up here, we have the 50-day moving average, and we're kind of stuck in this range. But look at the volume profiles. Big band of resistance. So another word of caution to say that the market seems to be getting a little tired. That does not mean it can't be refueled by this fiscal cliff issue, saying that it's been resolved. So we just got to take it one day at a time. Again, IWM's Russell. Russell really is the strength of all this, and it's totally incredible how Russell lagged so much. Nobody wanted to even think about buying it, and markets actually pushed up 2 big gap up days, actually 3, here, and now here, and that's going to confirm with volume here, double the volume, same amount of volume from yesterday, so that's actually a real good move. But again, the 50-day capped it. So if the market does roll over, this will be a good spot to look to get short. If the market rolls over, right now, Russell, I would not be looking to short unless you're hedging. Unless you're looking for some sort of a hedge in your long portfolio. XLF, just take a look at that, and as you can see here, doji candle. So we like to see a lot of these sectors, especially our leaders, and then of course the sectors that are a good gauge of risk, like the banks and tech stocks. We want to see them move. But yesterday was not actually very sloppy chart. If you can look at this here, gap up, then a little bit of gap up again, another one here, and then fade, and then right into this area, this long-term resistance, long-term trend line. Couldn't break back above it. But now we're going to need to really do some work here in order for the XLF to continue higher. All right, take a look at Apple. Apple here, looking for a little bit of a pause underneath that 200-day moving average. And again, then you have the 50-day moving average. So 620. 620 is going to be a good spot. 620 is going to be the area where I think that Apple will probably pause, and then we would reevaluate it. I mean, we could pause, kind of consolidate a little bit, and then take one more move higher. That absolutely can happen. But as of right now, Apple had a decent move up in the last 6-7 days, and now, to me, sitting on the 200-day. So we really need to break above this 200 and then really start working its way higher again. You might get one more big push up with a large engulfing, and then that would really capitulate its move here and then start to roll back over again. So you wouldn't want to see Apple break back below really that 20-day moving average. So let's say 555, 560, really you want it to hold to keep this market moving in an uptrend. All right, and then we have the Qs daily. Same thing with the Qs daily. Doji Star, big move up. Volume was decent from the previous day, but that 50-day cap is. So we're coming into resistance in all of these sectors. And let's take a look at the SMH. Same thing. We have 200-day SMH. Now, the SMH and the XLK, the tech sector really coming into some seasonal strength. That's going to help Apple as well. But we did have a nice little move. So a little bit lower in this area would really be constructive for this sector to move higher, at least come and test above the 200-day moving average. All right, guys, have a great weekend. Enjoy the weekend. Get some rest. And hopefully today we can have some decent movement. And see you all on Monday. Have a great weekend.